So as you guys can see, we've taken out the highs using London. We don't really have red folder news, but it is a Monday after all. So I'm expecting price to be pretty static today. But as you guys can see, we have a sell-off. So with this inverse fair value gap, we have this change in state of delivery. As you guys can see, with the inverse fair value gap, market structure shift, and that's why I entered here. I kind of entered before the market structure shift, but as you can see, we have this pullback towards this fair value gap area. Then we have this impulse downwards. So I'm expecting price to hold. It's okay. We'll hold this price action and we'll take it towards the closest draw on liquidity. Even though it's reaching for this, it's okay. We're consolidating a little bit. That's how not Mondays are. So yeah, we will expect to hit this target right here. Okay. Even if we're going into, it's okay. It's okay. Let it play out. Okay. If we have a rejection in price, that's fine. It's just a small fake out. Okay. We have 10,000, a million contracts on this. So yeah, that's pretty much that one. NQ. As you guys can see, we have the divergence, right? We have the divergence right here. SMT divergence, then you entry on the 1 minute market structure shift. See the CISD right here? You see this? You have this pullback towards one of these fair value gaps. You see 1 minute market structure shift, boom, impulse, right? Right after the 1 minute market structure shift. Sorry, 1 minute CISD. So you have this pre-CISD, so that's where entry, pull back a little bit, that's okay. It's good because it's balancing out one of these fair value gaps. Boom, impulse. Right? Because we have additional confluences during session-based liquidity. We have London, which took out Asia's lows. So therefore, when NY holds, when NY takes out the first SMT, it should impulse towards the upside, which is here. Okay. So this is all this liquidity right here. So we're pretty much going to go towards that one. Euro USD. Right now it seems like it's consolidating a little bit. I'm not. It's okay. Okay, let's let it play out. Worst case scenario, it's fine. It's a paper trade. I'm trying to become better. It doesn't matter if I lose this trade. It's okay. So right now I'm on paper because I'm not too confident about markets on Mondays, right? You see this change in state of delivery right here. Change in state of delivery. Pull back. You see this fair value gap holding. Boom, sell off. It's okay. Okay. It's just that I have a ridiculous amount of contracts just on this. But yeah, let's wait for price to sort of hit the opposing goal because we have this huge impulse of price action, right? So the overall market structure is bullish though. So I would expect price to be still bullish, which is a bad idea to be shorting now that I think about it. Okay, why did I short this market? Seriously. I saw this inverse and that's why I shorted it. I don't know why I shorted this market. It's such an obvious long. Again, guys, I have no idea why I shorted this market. Because if this holds right here, if this goes above past this point, right? Yeah, like past this CISD, if it has a CISD past this point, then pretty much it's gonna go bullish. It's gonna go bullish. To where? Probably the next draw on liquidity, which is here. But overall, I would expect price to low-key just balance out to the 50% of this price action leg. So that's probably from like, in this price action leg, I would expect price to balance out, let's say from here to here. Oh my god, so much stuff on my thing. So I would expect price to low-key go up here, right? So anyways, that's very far. So as long as I get a 1 to 5 out of this. So what I can do here is, I don't know why I took this inverse trade. That's okay. It's a test trade anyway. But I would consider that as a, you know, as a bad trade. So I'm gonna buy as well. Oh, what? What happened to my other trade? What happened to my other trade? Come on. Because this is definitely a buy. Because as you guys can see, market structure is bullish, right? If you see the CISD, right, which it's almost going towards the CISD. Once you see the CISD, if you see the CISD, boom. Just like that, we have a CISD. Now market's preparing to go higher, right? Market's preparing to go higher. Now, we'll aim for a... I can't aim for 1 to 2, but I don't really like this little area. So I'm going to aim for about... Let's say I entered right here, right? Okay, is it not situated over here? Need to wait for this candle to form, this 15-minute candle to form. So it's still forming, so it's not the best time to entry. It's okay, it's a paper trade. So let's wait for 1 or 2. Seems like price is rejecting this level though. It's okay, let's wait for it to play out. We have the SMT on the, this is the previous swing low, says our liquidity, SMT. We have the first manipulation, the SMT, and then now we have the change in state of delivery on the 1 minute. You see the 1 minute change in state of delivery, pullback, impulse, impulse all the way to buy side liquidity, closest drawn liquidity. Okay, I hope you guys got the idea, and I hope you guys so let's wait for price to let's wait for price to do what it does. It seems like we're rejecting price. That's okay. It's Monday. So it is supposed to be a little static. We have a rejection here. Holy crap. Okay, we have a rejection here. So this is why you should wait for a 15-minute candle to form. You know, take this. Because this could be a fake out. See, where's a fake out? And then we have a sell off. Right now we're consolidating in the same area, which is not a good sign to be trading. Because even though we're going bullish, we're pretty much consolidating in like a very similar area. Because we swept this liquidity, it's going to probably pull back towards one of these auto blocks or fair value gap. And then go higher. So maybe the first bias was right. I'm not sure how I took my first bias. I'm not certain why I took that first bias. Well, I think it was off this CISD and was holding this, right? It was holding this. I thought this was not going to hold because I saw that impulse up here. That was just a fake out. Okay, that's a good thing to learn because I have both of those captured. I have both of those captured. Because I was trying to long the market because I thought it was going to have a CISD. But turns out it's going to have a... If it's going down, where is it going down towards? Simple answer. One of this liquidity areas. One of these liquidity areas. So we have this huge auto block, this good auto block over here. So it's a likelihood that it's going to go all the way down there. But do I want to TP there? No, I don't. I want to get out before, right? So I will, in fact, look at the range that we're dealing with. And I will, in fact, mark out the range that we're dealing with. Or mark out the range that we're dealing with. And once we have this marked out range right here, We will expect price to go down towards probably 0.5. Yeah, right here. See? This is 0.5, so it aligns with the bias as well, the equilibrium. So I'm expecting price to come down to 0.5 on the OT, which is aligning exactly with this. So I'm assuming the order block is 15-minute order block is right below, which it is, right? See this huge imbalance in price, and this is the order block. So therefore, I can confidently take this trade down here. But if I want to be safe, I can put it here. But if I don't want to be safe, I can put it down here. Again, ignore this trade. I don't know why I took this. This was, I thought this was going to be a CISD. Again, this is a paper trade, as you guys can see. So it's not a serious trade. That's why I took such a dumb little trade. Again, I don't go to 1 to 6.4. I would go for 1 to 5. That is over here. Okay, 1 to 5. Maximum risk to reward. And let's see how this plays out. And we have the, yeah, this is the impulse towards the upside, as you guys can see. Got the SMT. We have the CISD, as you can see. And we have a bit of a rejection, but it's okay. Let it play out. Let it play out all the way up to buy sell liquidity draw. Let's see if we have any opportunities on gold today. Doesn't seem like it. Let's see. Let me just get rid of everything so I can see properly. Okay, so it seems like gold is rejecting price. So it's clearly right here. This fair value gap is being inversed. But I'm not going to make a conclusion yet. Wait. I'm not going to make a conclusion yet. But I see the CISD. So I see the CISD, I see the pullback towards this inverse fair value gap. You see this gap here, that's a fair value gap. Inverse fair value gap, 1 minute one minute market structure shift. Boom, from there it just sells off, right? Sells off towards this sell side liquidity draw. Right after that, you see this manipulation. You see the CISD once again a sell off, right? Sell off. This is just to balance, but this low is holding. Why? Because this is from the sweep. And then we have this CISD. We see this change of structure, right? This high right here was broken right here, and you see this sell off, but then it didn't hit here because this low is protected because this from the parallel to the swing low. So it's gonna hold, it's gonna go and hit this target right here, okay? Because if you think about it, in the overall target, right? If you think about it, in the overall swing low to swing high at this point, you can see that this is below 0.5. So either way, if we TP here, right? TP right here at 0.5, we're pretty much good to go. Okay. So I'm going to entry from probably in this case, I'm just gonna entry because, like, you know, let's just assume this was like we were entering from here, okay? Because this is a paper trade. I'm going to just entry because this is paper. Again, do not entry just like this. That's a fucking stupid way to entry. But I'm going to entry right now. And what's up with the buy order? It's not going. Okay, there we go. One executed. Okay, so we're in. Of course, it's not the best entry. I was supposed to entry here in this fair value gap, but it's okay. We had this huge impulse. So over here is where I was supposed to entry this fair value gap. But it's okay. We'll hold this, right? We hold this, and we hold it towards buy side liquidity drop right before this level. Assume we got in right here. Put a TP stop loss right here, like right below, slightly below the swing low. And then we hold up to this swing, this 0.5. I'll take a 1 to 5. That's my rule of thumb. I don't take anything more than 1 to 5. So as you can see, it's using this level as a support level. So that's pretty good confirmation that price is rejecting this level, right? We see a huge rejection in this impulsive order block right here. It's a good order block. Why? Because it took out both of these candles lows. Okay, so therefore we're holding. Okay, so now let's hold it up to this point, but not really, because I'm holding to, you see this range, right? This is the swing low, and this is the swing high. See this 0.5? That's, I was going to go there, but that's too much risk to reward, so I'm going to take a 1 to 5 and get out of the market. Simple as that, okay? Of course, it's Monday, so obviously the price is very slow today, to say the least. I don't mind this, okay? This was a horrible trade. I was not supposed to take this. I was supposed to take the inverse, okay? Don't worry about it. I was supposed to take the inverse because we took out the SMTs before open, as you guys can see, right? Took out the SMTs before open. We have this huge impulse, right? Took out the SMT, right? So now we should sell off because we have this change in state of delivery, right? We have this change in state of delivery. We have this fair value gap being rejection, fair value gap rejection, market structure shift, and they should sell off. Again, I wouldn't trade this section now that I think about it. There's no It's consolidating for way too long, so I'll probably break even here. I won't trade this. The other one is clear though. NQ. Oops, fuck. What did I just do? What is all this? I'm just gonna cancel this for now. It's too much crap happening on my screen. So SMT is done, right? SMT is done. I don't know what I put here, but this is basically the rejection from this is 1 minute market structure shift. But right here, as you can see, you don't really need to put your stops all the way here. You can just put it somewhere, like somewhere here. That's fine. It's a ridiculous stop loss, so fuck it. But I think the ideal thing to do in this scenario is to entry after the CISD, because then you can like use one of these swing lows to put your stop loss and trade it up to here. Okay, so let's pretty much let it play out. It's very static today because it's Monday, but it should play out. So let it play out and don't think about it. Just let it play out. Let it go. Let it go. I don't know. I forgot the rest. But yeah, you see the constant rejections of price from this order block, 15-minute order block. So therefore, let's take it towards 0.5. Well, 1.5 right here. I'll put this slightly lower, like 20 pips below. There we go, just to be safe. And I'll target a little bit more. Maybe up to... There we go, perfect. Right here. It's perfect, por favor. We have the CISD, as you guys can see. We have the change in state of delivery right here. So we have shifted market structure. Bearish to bullish, officially over here. Once again, we have this confirmation. We have this rejection. Where are we headed? Is that parallel to this drawn liquidity? Yes, it is. 0.5 of this whole range. What does price do? Generate liquidity, hunt liquidity, and then rebalance equilibrium and rebalance inefficiencies. So, what does this say? I was supposed to enter here, guys. Don't worry. Sorry, I'm yapping right now. Let it play out. I don't know what this is, but ever since I was a kid. If I was you, I would cut off my wrist. Because it's bearish, I'm going to expect price to pull back to this order block. Where is that order block? I don't know where the order block is, but yeah, so CISD, as you guys can see. CISD, as you guys can see. Kind of rhymes. So let's go up to this wick. So we will TP here, right here. It's a good buy-side liquidity draw. If I was you, I would cut off my wrist. In GTA. For community violations, that's only within GTA. I didn't mean it. SMT. Right. Got the SMT out. And the change in state of delivery on the 1 minute. We also have the so once the SMT happens, obviously we will just go impulse. It's okay. Let it go. Let it go. 1 minute CISD, as you guys can see. And then we have this pullback. Now we have a rebalance. Okay. Oh my god. Yup. Yup, yup, yup. Yup, yup, yup. Yup, yup, yup. What was that from? Yup, yup, yup. Yup, yup, yup. It was from like a Disney thingy. Not this Disney. It was like the kid who was killed by her dad. Yep, yep, yep. No, what was it? Princess. No, dinosaur. One of these. Yep, yep, yep. This one. Poor girl. She died because her dad apparently killed her or something. I don't know. Pretty sad story. That's what I heard.
Yep, Petrie. You keep it safe. Yep, yep, yep. Nope.
Yep, yep, yep. Yep, yep, yep.
You keep it safe. Yep, yep, yep. Nope, nope, nope.
Yep, yep, yep.
Yep, Petrie. You keep it safe. Yep, yep, yep. Nope, nope, nope.
Yep, yep, yep. Yep, yep, yep. Yes, sir. I would. Anyways, I'll let you guys know how this goes. I'm pretty sure it's gonna hit TP because we have market structure and liquidity aligning with the concept, so pretty sure it's gonna hit TP on this because we have this London took out the Asia's lows, and we have this change instead of delivery pullback and then go towards that. Anyways, I'll update you guys about how this goes. I hit you guys later because I want to head out. You guys will see if this is true or not on your charts itself. Basically the buy side liquidity draw, so it's like right here. And yeah, that's pretty much it for now. Let me do a double check, you know, just to make sure the kids at home are safe. I know what I'm saying, but yeah. So we'll hope for price to reject at this 710. Okay, so it's parallel to this auto block right here because there's a lot of resistance liquidity in this area, so I'm gonna take it there. But the first TP, I would expect price to I would TP here. I would get out here first. If I was you, I would cut out my wrist. Because it took out SMT, it can just impulse. It's okay. Let it play. Let it go. Let it go. I forgot the rest of the words. Let it go. Let it go. I forgot the rest of the words. Low of day, SMT, impulse. High to high of day, right here. That's why I said. So there's a lot of resistance liquidity here as well. So I would expect price to take all of this and then go. Thank you guys for understanding my bias. Right now it's consolidated because my entry was horrible. Don't worry about it. This was where I was supposed to entry, okay? This right here, this spot, okay? This is where I was supposed to entry with my stops right below this targeting here, okay? These are the two trades that I'm taking, okay? All right, I'm not taking Euro USD. Euro USD is too volatile today. It's consolidating way too much. I'm not trying to trade this, okay? But if I was to take the trade, ignore this fucking trade, I would take this one, okay? I would take this one. Why? We see a change in state of delivery right here. We have a rejection in price. This inverse Farley gap is rejected. And now that makes a very strong balanced price range. So therefore, if it pushes further than this, we see a huge rejection in price in this area. So again, this could be an SMT. There's no smart money trap taken out. So we do see a SMT now that I think about it. Yeah, we do have an SMT. See? Sorry. This is the SMT. Just want to make sure you guys know. SMT taken out. Now we see this inverse. And we see the swing low. Swing low being broken. Fair value gap. Inverse. Depth of displacement. And we see this. Right, so now we will inverse this down towards equilibrium. But again, this huge order block is here. So if I was to take a trade, I would take this 2 trades a day. That's what I take. So I don't really want to go above that as well. So this is the order block right here. So I would expect price to rebalance this in the grand scheme of things and then go higher because this is the overall narrative is bullish. Okay. Oh my god, this is so messy. Christ. Oh my, chill, calm down. Please don't put me through this. Thank you. Okay. So let me just take a, so as you can see, we broke the high, which means we're officially bullish. And now it's basically balancing stuff out and just going higher because we have changed the state of delivery after this high is broken. Both of these highs are broken. Change of character. Okay. So as you can see, if we have the impulse, if you look at the market structure, we went from bearish to have forming this first high. We have this high broken through, pull back, go, pull back, go. Okay. That 15-minute pullback is what we're expecting here. So my only worry is that whether it will go for another round. I mean, this one, I don't think it will because it's consistently rejecting price, and we see the CISD. Okay. All right, we see the CISD as well. We have both these CISDs. Pullback, fair value gap, holding, 1 minute market structure shift. Now inverse. Okay. Depth in displacement, rejection. Okay. Pretty much that's what I want to show you guys right now. Don't worry about this. Our entry's down here, so we're pretty much still in profit. Anyways, I'll see you guys later because you guys know where my TPs are. Okay, this is where my TP is for this, and this was a backtest. Don't worry about this. TP is here, and TP is here. Actually, it's here. My bad. Sorry. Right here. Okay. So TP is here, and now we will impulse towards the upside. Right here. The closest draw on liquidity is here, but I would expect price to roll key just take this out as well, because it's right above. Sweep the liquidity and then go. Because the overall bias is bearish. So if I want to really stay safe, I would probably TP here. Give shit restore out though. Let's figure it out. I gotta be good at understanding where to TP exactly. Need more confidence, so I should paper trade more. Yeah, so it's rejecting price. You see this wicks? It's pretty much rejecting price. You see this market structure shift. We see the pullback, fair value gap, inverse this. See the price is sort of consolidating in one area, and we should sell off at some point. Because sellers have gotten exhausted at this point. CISD, pullback to this fair value gap, inverse this. Protected high, boom, sell off. Order block, high time frame order block. And then a lot of imbalance within it. Go. Equilibrium as well. So it's pretty much balanced out. Everything's balanced out. 1-5 ratio. Cool. Take it. I'm just gonna put this a little above and go for a little below. A little below. Somewhere like here. Let's let it play out. Anyways, you guys can tell for sure. I'll hit you guys up later or tomorrow, and then I'll show you guys what happened with the trades. Okay, as far as right now goes, let's let it play out and let's see how it does. With that being said, I'll see you guys later.